Good afternoon, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 18th of April here in 2023, and we have earnings aplenty. Let's look at some earnings in tonight's video. Just in terms of where we're starting, I know the big headline is going to be Netflix. We'll get there. But first, let's start with Lockheed Martin. On the daily chart, what we're going to focus on is where the stock is trading in the big picture. On the big picture, you're going to see just in a moment that Lockheed Martin right here is one of our stocks in the S&P 500 that just clocked in a new 52-week high, and that was done on the back of earnings. So just because the video is only an hour, we'll just look at the pricing and where we are, what the reaction was, and what might be the future for stocks like these. But Lockheed Martin does break out of its trading range, and the current price is right above $500 per share. And behind that will be Bank of New York Mellon. The financials are in focus, and there is a split between the regional banks, which is the ETF KRE, and the big banks. And with the exception of Goldman Sachs and a little bit of others, we are seeing some positive earnings, either due to higher interest rates or due to a lot of money coming out of regional banks into the larger banks. So that's one trend to watch, at least in the financial environment. And with the XLF coming up away from its support levels, just getting back inside its trading range. Again, on the flip side is KRE, regional banks. So you are seeing a distinct split with money coming out of the regional banks, smaller banks, and into, in general, the larger banks. So with that in mind, let's go back to Goldman Sachs. Goldman was one of the other companies that was down today, at least on their earnings pre-market. They did report a strong earnings per share, and if you ever want to take a look at what these earnings per shares are, or the results are, you can always peek at the fundamentals here in the thinkorswim tab. Fundamentals, Goldman Sachs. And for earnings specifically, look at what the earnings were. And they'll update this usually after the close. But nonetheless, there are the numbers and the expectations. Earnings per share is going down over time. That's the trend at least. But nonetheless, in terms of the reporting, their actual was under what Wall Street expected. And sometimes that's enough, even if the earnings are good in terms of profit, to send a stock falling. Goldman Sachs was one of those stocks. Bank of America, BAC, slightly up on today's session on its earnings. And again, you can always take a look at what they are and what the numbers were. It actually beat the expectations by a little bit, but that's another story. Outside of those, we had Johnson & Johnson. It was down on today's session, down roughly 3% on its earnings, and that was about 2.68 on reported, and their conference call is what sent that stock down to close at the lower bound under this 161 per share. Okay, we've hyped it up enough. Let's get right to it. Netflix. Wait a few moments and it will be completely different. Right as we were at the bell, Netflix reported its earnings. And one other note, if you want to look a little bit at the news events, you can always go to a live news tab here on the thinkorswim window, the widget window, and see exactly what they're saying about Netflix. So again, won't read these, but these are the headline news. There's a big headline in this, and it's hard to miss. They are going to stop their DVD business. Netflix was originally known as a DVD company. And to think of the days of Blockbuster, way back when, they were a competitor to Blockbuster. So a DVD by mail company. They had success as a streaming company, and then later they had their own individual shows and content. But they always kept their DVDs, and that may be something you've forgotten. That's something I forgot, even as an original subscriber years ago to Netflix and their DVD business. I thought they got rid of that years ago, but they are officially getting rid of it as in terms of their earnings report. They made that announcement today. So they'll be phasing out the DVDs and focusing exclusively on streaming. Nonetheless, membership numbers, earnings per share, losses per share, all the things we have for Netflix is right there in the news. What happened to the stock? Again, give it a few moments, it'll be different. There was an initial, and before we get to what happened, the expected move for Netflix shares in the option market, $30. $30 up or down with a 125% implied volatility. Where did the stock move? $30. Actually, a little more, $35 down. But wait, there's more. $35 right back. In fact, closing around this 333 takes it down to about 303, with the exception of that little candle right there. That is where the bottom of Netflix happened on its earnings-based expected move. As of this video, and by the time you hear the video, Netflix could be right back to here, or maybe even massively unchanged. That's where it is right now. The share price after the earnings and after the bell is $332. So initially thinking Netflix was going to trade down to here, it is back where it started. So those are some of the highlights as we're looking here in TheoTrade with any positions, butterflies, or spreads, or anything with shares that you may have on for your earnings positions. Tomorrow is going to be Abbott Labs. You can always take a look at the expected move, roughly $3 up and down. Morgan Stanley is going to be a $350 expected move, and then US Bancor USB is going to be a $2 expected move with an 86% implied volatility. I saved the best for last. Two of the best for last. In fact, we'll save the best for last. IBM. IBM is a technology company, a leading company, and it has an expected move, not pricing a lot of volatility, 56% implied, with the $5.20. Again, this will be different at the close, but this will be the logic. Different at the close. This will be 24 hours from now. We'll have the earnings from IBM. But we'll have Tesla shares, and Tesla has a 104% current implied volatility for its earnings, almost $14 of its expected move. That's what we're pricing into the shares of Tesla with respect to its expected move. And once again, we'll update these on tomorrow's session, and I'm sure we'll be talking about this a lot in the TheoTrade chat and other instructors, and any positions you might have for Tesla shares, with a, roughly speaking, current expected move of $14, which is slightly higher. So that'll be the numbers going into the close. Anything else outside of the market in the grand scheme of things, unchanged, massively unchanged at that, with respect to the S&P, with respect to the Nasdaq, and the Dow. So a quick peek at our intraday chart of these markets shows not much. There's the open, there's the close, a small gap up, a range trading session, and we closed right there. And that's right where we closed on Monday's session. Nasdaq, roughly speaking, down a little bit. The Dow mini futures, you can't even see where it traded. There's your open, and there's your gap, small gap, and there's your close, massively unchanged. And the Russell was the weakest. It was down almost 0.5% today. Crude had its own volatile trading session, and the bond market, TLT at least, had an initial bounce that faded throughout the trading session. So there we are on the grand scheme of things. There's no change from last week, where we have this trading range, or this volatility box, as we are calling it. And the volatility box is 4,200 and roughly 3750 for the S&P, the futures market. And this is what I like to consider the risk pathway. And that is the breakout pathway a little bit further beyond 42, 42.25, and 42.50. Means the market has a good probability to continue, we call it short squeezing, but just repeating what happened in August, which is a break above the same level all the way, a couple of trend days in a row, to 4,400. That to me is what I call the risk pathway against the reward pathway, and that's only because of the probabilities and what the box signifies of the market resisting back down. That is your reward pathway, and further financial success or financial earnings or anything else could be a catalyst that gets a snowball rolling, in this case up, but we'll say down, rolling down the hill to squeeze the market back to 4,400. That's your risk. Otherwise, the reward pathway is back to lows. That would show up in financials as an ETF, would show up in technology, which is against its overhead resistance. XLK has a short into the 150 per share. And one more, XLY, consumer discretionary, is in the middle of its trading range. So chop across the board, rectangles across the board, and not a lot of volatility, at least yet. Earnings aplenty will come in tomorrow's session, mainly from IBM and Tesla. Just always be careful and safe. This is Corey Rosenblum with tonight's Theo video update for April 18th, 2023.